Good morning, everyone. Thank you for joining us for today's virtual conference, Manufacturing Education Day, presented by Ray & Associates, a top 100 regional CPA and business consulting firm with offices across Ohio. My name is Imani Fields, and I'll be walking you guys through today's housekeeping items. First, if you have any questions during today's presentation, you may enter them into the chat box on your screen. We will try to answer as many questions as we can at the conclusion of today's presentation. However, to be respectful of your time, we know that we will not be able to get to them all. Therefore, following today's webinar, we will review all questions and send out the answers via email as soon as we can. When you receive this email, you will also receive the recording of today's presentation, as well as a link to participate in a very short evaluation. Please take a few minutes to share your thoughts about the presentation as a whole, the information provided, and our presenters. Your feedback is important to us as we determine future webinar topics. Also, if you'd like a copy of today's slides, you'll find that they're available in the handout section of the webinar dashboard on your computer screen. Before we introduce our moderator for today, we would like to take a moment to recognize the Southeast Ohio Manufacturing Extension Partnership located at the Ohio State University South Centers in Piketon, Ohio, as the co-sponsor of our webinar today. The Southeast Ohio MEP is one of 6 MEPs across the state of Ohio that strive to help small and medium-sized manufacturers to increase sales, create jobs, and cost savings through technological innovation, workforce training, and improved management practices. With oversight from the Ohio Development Services Agency Office of Small Business and Entrepreneurship, the MEPs operate as an initiative sponsored by the U.S. Department of Commerce National Institute of Standards and Technology, better known as NIST. Through these challenging times, they are committed to offering much-needed resources to Ohio manufacturers through various programs to ensure that the manufacturing footprint in Ohio remains strong. If you have been affected by COVID-19 pandemic and would like more information on resources that may be available to assist you in the recovery, please reach out to your local MEP representative or a member of Ray & Associates manufacturing team to get started. Now, I will introduce today's moderator, Dustin Raber. As the Principal and Director of Manufacturing and Distribution Services at Ray & Associates, Dustin has more than 10 years of experience in the accounting and manufacturing industry. He is committed to conducting audits, reviews, compilations, and consulting with for-profit clients, focusing on manufacturing and distribution industries. And now I will pass it on to you, Dustin.
Thank you, Imani. I just want to start out today by thanking everyone for joining us today. As you guys may know, today is National Manufacturing Day, which occurs on the first Friday of October every year. This is Ray's 4th year of participating in the day with an event. However, this is our first year of having one virtually. So we thank you for being on here, and we're excited to bring some of our top talent at our firm, along with some key partners of Ray's, together today to present on what we feel is very important for manufacturers to hear on. That being said, I'd like to start off with the day by introducing our first 2 presenters, which are Andrew Geyser and Ben Fraze. Andrew is a manager at Ray & Associates in our Millersburg office. He is committed to preparing individuals and business tax returns, financial statements, compilations, and assisting with audits and reviews. Additionally, Andrew has expertise including in the manufacturing area of cost accounting, analysis, budgeting, and internal controls. Ben Fraze, who is a principal in our New Philadelphia office, specializes on the tax side, where he's involved with client relations, tax returns, and consulting on various tax inquiries. With more than 10 years of experience, his areas include taxation of health insurance, pass-through entities, Ohio small business deductions, state depreciation add-backs, and municipal income tax apportionment. At this time, I'm going to pass it off to Andrew and Ben as they go over their slides for current issues in the manufacturing industry.
Thank you, Dustin. I appreciate that. We're going to start off today's webinar with kind of some highlights of what we're seeing in the manufacturing industry, in the business industry in general. We're going to touch on some Paycheck Protection Program updates, and then kind of look at tax opportunities and issues with a couple of the tax changes that have occurred in the last couple of years, and then things to consider right now as we're heading into the end of the year. We'll end with questions, but if you have any questions as we're going through this slide, definitely enter them into the question bar, and we can try to address those as we're going. So I'll hand it over to Andrew.
All right, thanks, Ben, and thanks to everyone as well for joining in for this event. Like we said, we used to do it in person, but this year we can't because of the pandemic. So we'll try to make the best of it and still get you some good content out. So what we're seeing right now is, in general, business appears to be good for manufacturers. There seems to be a lot of activity going on, just with everything with the pandemic. I think the way that the economy rebounded after the lockdowns was a little bit of a surprise, maybe, but overall it appears to be good. And Ben and I we were fortunate enough to sit on some webinars and panel discussions of some manufacturing experts across the nation last week, and that sentiment seemed to echo pretty much across the nation, not just kind of locally here in Ohio or even in Northeast Ohio. And so one of the things that we think maybe contributed to that was that when you think about the lockdowns and what businesses were deemed essential, especially here in Ohio, many manufacturers in Ohio were deemed essential. And the way the wording was in the order, a lot of them were specifically called out as being essential, but even ones that maybe didn't seem to be on the surface were able to still be open, and ones that maybe weren't essential did pivot to look at making PPE or some of the other initiatives to help get through what was going on. One of the other things that we're noticing is that as far as who's rebounded and who's not, it seems to be very highly dependent on who your actual customers are. Just with the way kind of the whole supply chain went crazy, with different stay-at-home orders, different rules for lockdown across different states. It just seemed that depending on who you were selling to kind of dictated as to maybe how quickly you were able to come back. One example that we heard about this was down in Texas. There was two companies, basically identical size, real close to each other, both made semiconductors. One of them was selling into the electronics industry, and they sprung back very quickly. They're way up over the prior years, while the other one was selling into the automotive industry. And so just everyone knows that some of those big automotive plants, shut down for a while. And so that company hasn't rebounded as quickly. So it really just kind of does depend on who your customers were, unfortunately.
And one thing I'll add to that is with the auto industry, there's such a trickle down effect that there's a lot of companies that 2, 3, 4 layers down from that auto industry that were affected. And that's not something that you would necessarily think of, but there was a lot of impact, quite a few layers into that supply chain.
Yeah, that's a good point. And so that really kind of goes into our next point here, is that we're really starting to see some of these supply chain issues creep up. A lot of this, I think, is driven just with the fact that the economy did rebound, I think, a lot quicker than what people thought as far as where it went to where it is now. I think we still have a long way to go, but it did come back. And so whether it was, some overseas sourcing issues just with borders being, tightened up or potentially closed to help control the spread, or whether it was just, demand coming back way faster for suppliers than what they thought. We're seeing some folks have just issues getting the material they need to keep their processes running. And so one of the ways that we're seeing manufacturers combat that is to just take a step back and really assess the risk they have in their supply chain. So looking at their raw materials and what are the materials that are critical to be on site to keep processes running, and who are the suppliers of those materials? Where are those suppliers at? What's the lockdown status, or what's the stay-at-home status, if there is any, in the state they're in, or in maybe even the country they're in? And really just looking at where do we need to be focusing our time from a supply chain to make sure we can get the materials we need. And then in addition to that, we're seeing companies go beyond their tier 1 suppliers down into tier 2 and tier 3 and doing some of this, which would be the suppliers of their suppliers and so on, just to try to get a handle on, where is the risk in their supply chain to make sure they have the materials they need ready to go on site at the right time to run their processes.
I mean, 2020 has been a year with the pandemic, but then you also see some of the other natural disasters that are affecting supply chain, whether that's the flooding in the south, the fires in the west. There's just lots of things that are affecting the supply chain, and it depends on where your suppliers are getting their supplies from. And so just taking a look at that from a high level is really beneficial, identifying where those risks are and looking to see where can you mitigate some of those risks and bring on different suppliers and diversify your supply chain a little bit more to remove some of that risk so it doesn't hit you the next time we're in these issues come up.
Yeah, that's a great point. And so, and then the last that we're really seeing, and I think this probably doesn't come as a surprise to anybody, it was an issue before COVID, just with the way the economy was going and low unemployment, but just having workforce issues and not only finding people for jobs, but finding the right people with the right skills is still an issue. And so through COVID, with the CARES Act and some of the legislation that was passed and the extra unemployment benefits, in some ways took away the incentive for people to want to work. So we're, obviously there was that effect. And so what we're really seeing now is as we come out of this, there seems to be an increased focus on, looking at automation and Industry 4.0 solutions to help, mitigate some of these issues and just, leverage technology to not necessarily reduce the workforce, but to be able to get the work done that needs to be done, especially as, now there's talk of, potentially reshoring manufacturing, from overseas just to help, stabilize the supply chain and just with everything going on, just seeing some real push towards technology. And so then lastly, this was a big theme in some of the national webinars that we've been on, is looking at what does the workforce of the future look like as we move from maybe a more transactional, labor-based processes and into more, machine-based and technology-based. What are the skills that are going to be needed to make those processes run and to service the equipment in those processes, and just to it just looks very different than what it did in the past. And so, just trying to think through that, companies are looking at that. They're going down into trade schools and looking to get those skills and build those skills so they can hit the ground running when they do decide to maybe take some of those steps in technology. So,
yeah, one of the things that we've heard a little bit about in the last couple of weeks, and maybe it doesn't come as any surprise to you, is the fact that even though there's a higher unemployment rate, finding the right people to fit your needs is still an issue. I know I heard last week that there still are quite a few companies out there that are offering sign-on bonuses just to get the right people in the door. There's a lot of people that may be applying, but for the same issues we've had in the past, whether it's not being able to pass drug tests, that might weed out quite a few of your candidates, and then just not having the correct skill set as you automate more, as you bring in more technology into your business. It's harder to find people that fit that. So you got to kind of work with the career centers and stuff like that to find the right skill set, the right group of people to fill those needs. So it's definitely going to be something that is going to be an issue going forward as well.
Yeah, and for anyone who follows kind of what's been going on politically, I was reading this morning, I think last night the House did pass another stimulus bill. Whether or not the Senate takes it up and actually looks at it remains to be seen. But from what I had read, it looks like in that bill would be included a return to the $600 a week extra unemployment benefit. So unfortunately, we'll have to see how that turns out and whether or not that has another impact on the labor force. But that was something that kind of came down, I think, later last night when the House officially passed that. It remains to be seen how far that will go between the Senate and the White House yet. But
And before we jump off this slide, one more thing I wanted to bring up on the supply chain side is on the shipping distribution piece of it. What we've heard on some of the national conferences we've been at is how some of this onshoring has changed the infrastructure that's needed for that shipping and distribution. Where it's being produced now. It used to be brought over from China, and now it's being produced somewhere in the United States, and now our infrastructure has to change to get that around the country where we need it. So, there's some disruption there in the distribution side. One of the things that they brought up that I wouldn't have thought of either is the capacity that's going to be absorbed in the distribution of, say, ballots and vaccines and some of those things that we haven't seen, and impact us so much before. And so some of that distribution capacity is going to be absorbed in some of those things that are new to 2020. So, there's something to think about is not only where are you getting your products from, but do you have the infrastructure to actually ship it from there to where you need it?
We can go ahead and go to the next slide. All right, so it feels like it wouldn't be appropriate to have a webinar in 2020 without some sort of paycheck protection program discussion or something like that. So really, we just want to touch on this a little bit. And for those of you that have been following what we here at Ray have been doing with regard to this, we do have a dedicated task force and several experts on this on the technical side. Neither Ben or I are the technical experts, so if you have specific questions, feel free to submit them. We will try to answer them the best as we can, but we will definitely be sure to pass those along to any of the members on our team there. But really, one of the big questions right now is whether or not there's going to be a round two. And I was reading as part of the bill last night that the House passed. There was language in it that looks to either extend and open it back up to help potentially let businesses that need it claim some of the money that was unclaimed from the first two rounds, or maybe even expand on it. But one of the things that I did read was that it looks like it might be more targeted to specific industries or sizes of businesses this time. But it looks like it is being talked about. Right now, nothing is official, nothing has come into play. But so it kind of remains to be seen there. And then I think probably the biggest topic that everyone is chomping at the bit to learn about and to figure out what's going on is just to have a forgiveness update and what's going on with regard to that process and how businesses can go about getting their loans forgiven. And unfortunately, right now, there still remains to be a lot of uncertainty related to forgiveness. There's been talk about, potentially auto forgiveness for maybe loans under $150,000 or maybe $200,000. And so, right now, I think from our standpoint, our recommendation would be just to continue to be patient. Let some of this guidance work itself out. See once if Congress does address this as far as auto forgiveness, and then just to see once how all that shakes out. And so one thing we were able to find out was that as of I think last week, the SBA had approximately 96,000 applications that had been submitted to them. But as far as we know, they haven't approved a single one for forgiveness yet.
They haven't even actually started processing the applications at all at this point.
Yeah, and I think supposedly from what we're hearing is that may start next week, but whether or not that actually happens, we don't know. But that's what they're saying. And so if you think about 96,000 applications and there was over 5 million loans issued, it's less than 2% have even gone through to the SBA yet. So continue. I guess recommendation there would be continue to be patient and just see once how some of this guidance shakes out. And so the other benefit of being a little bit more patient is there's still a lot of uncertainty as far as what are the tax implications of forgiveness. Congress was very clear in the CARES Act that the loan proceeds will not be taxable, but then the IRS has now taken a stance, according to previous statute and code, that expenses are non-deductible. And so as of right now, I believe it would take Congress to act again to change some of that. And so really from that standpoint is really to just consider what is the status of your loan going to be at 12/31 at the end of the year, if you're on a calendar tax year, and what does that mean for the expenses associated with the loan. There's been a little bit of guidance on more of the accounting side that says if you haven't had it forgiven, you can potentially leave it on the balance sheet. And so whether or not you can do that for tax purposes and still deduct the expenses is a little bit muddy right now. And so just considering that, and then considering with the election coming up and the talk of if the election goes a certain way and the potential raising of tax rates, even if there is an opportunity to defer not deducting the expenses to a later year, is that even something that you want to do? So really just unfortunately just continue to be patient and see where that comes out.
I think just as of now, the way it sits now is that the expenses associated with the forgiveness are not deductible. So the questions come up that we need more guidance on is that if those expenses were incurred in 2020 2020, but the forgiveness occurs in 2021. What is the IRS's position going to be? Do we have to file 2020, assuming they're deductible, and then if the IRS, follows through with that position, we have to go back and amend it? Is it going to be a 2021 only issue? So that's kind of the reason for why we're recommending, being a little patient, getting some more guidance, because unfortunately, this is not one of the first times where we're going into the end of the year and just don't have any idea how the transactions you made during the year are going to impact the year. The IRS has done this in the past where they give guidance after the fact that affect a prior year. So it's one of those things where you're just going to have to be patient on and wait to see what Congress does and how that kind of trickles down through and how the IRS is going to interpret it.
Yeah, that's a good point there, Ben. And so, what can you do at this point? Really from an action step standpoint, just continue that dialogue and communication with your banker. It seems like there's plenty of variability as far as how specific banks are treating this and how they're approaching forgiveness. So just making sure you're having that dialogue so you can be ready when the right time comes. And the second thing is just to, maybe look at developing a timeline to know what all your key dates are in the process. And so if we go back to kind of how everything started, the clock started when you got your money. That kind of started the clock on your measurement period. So then maybe deciding, are you going to use the 8-week measurement period or the 24-week measurement period? And when does that end? And then when that ends, that starts the clock of 10 months to get the forgiveness application submitted, which then once that's submitted, there's a 60-day window for the bank to review and get that submitted to the SBA. And then the SBA has 90 days to essentially rule on forgiveness. And so, realistically speaking, it could be almost 5 months from the date of submitting your forgiveness application before you hear either way. So, but just putting those dates down, having those on your radar, so and what info needs to be gathered at that time would probably be something that could be done right now. So. And
the other thing we kind of recommend is, there were some companies out there that they absolutely needed it because they spent every dollar of that PPP money just to keep them going. There were some companies that maybe it turned around a little quicker and they didn't use it all up. And so just being aware of the cash and tax implication that could potentially be out there, maybe setting some of that cash aside to cover the potential additional tax as a result of that forgiveness if that occurs. So we've seen quite a few companies that have said, all right, we're expecting this to be taxable, so we're going to set X percentage aside to cover that taxes when we do have that tax impact. So just something to think about.
We can go ahead to the next slide.
It looks like we're running a little slow here, so we'll move a little quicker through our next couple slides. A couple other things that we wanted to point out is some of the cash flow provisions of the CARES Act, and this specifically what we were wanting to make sure everyone was aware of, if you aren't already, is the NOL carryback potential and the changes that were made with the CARES Act. It changed in beginning with 2018. We were no longer eligible to carry back NOLs, and you had to carry them forward. And then they passed the CARES Act, and that reopened 2018. 2019 and 2020, those 3 specific years, to allow for if you had an NOL in one of those years to carry it back and get refunds of taxes that you paid in previous years. And it opened it up to where you could actually carry back 5 years. And so that's something that if you had NOLs in 2018, the time period to file the quick refund application is gone, but you have to actually do a full amended return to get those get that refunded back to you. But 2019, if you had a refund or an NOL in 2019, we can carry that back to 2014 if you had income in 2014, 15, 16, any of those years, and you can get some of your cash back from taxes you paid in those years, and then it'll be available again in 2020. So something just to consider, help with cash flow. The other item would be there were some changes in the CARES Act on improvement property. So prior to this change, if you did some capital improvements to the interior of buildings, would have been qualified improvement property previously. It was technically would not have been eligible for bonus depreciation, and the CARES Act opened that up and allowed you to take bonus depreciation on some of those capital improvements. And so if you didn't take that bonus, you could potentially go back and amend some of those returns to capture more depreciation, which could potentially either get money back in that specific year or create an NOL then that you can carry back to a prior year. So some of those cash flow opportunities to think about in improving your cash position currently. Another one we really wanted to point out is the R&D opportunities. So this is always one that is big in the manufacturing industry, research and development credits. So if you're updating processes, trying to figure out new products that you can make, the R&D credit is something that could provide a lot of benefit. And with the pandemic and a lot of companies converting their lines into producing PPE, that's definitely something that you should really consider this year if you hadn't in the past, because to figure out how to get that PPE made, you would have had to go through a lot of processes that would have been eligible for that R&D credit. So,
I think just taking an overall look at with everything that has happened so far this year and all the changes and a lot of companies have done things a little bit differently this year, maybe even produce new products, just to not lose sight of how that impacts your tax situation, because as Ben said, there are some dollars out there available with some of the provisions that were passed. So just keeping that in mind and making sure to review it and discuss it with your CPA.
Yeah. And going off of that, definitely be in contact with your CPA, whoever that might be. It's really important to be communicating, to be looking at what is happening this year, what are the things that are potentially going to happen between now and the end of the year, and doing a lot of your normal tax planning along with planning for the PPP treatment. When do you get that forgiven? When do you apply for the forgiveness there? When is that going to impact your tax return? So being in contact with your CPA, talking about those normal tax planning opportunities plus some of the other new items that we're dealing with this year is going to be really important. You want to go ahead and switch to the next slide?
Andrew and Ben, I don't want to cut this short, but we're about 8 minutes left here, and we have some questions trickling in. So if you guys want to wrap this up here in the next minute or two, we'll get into the question section.
Yeah, absolutely. We'll do this one pretty quick. These are more things just to consider your overall cash position. You have, with the changes potentially in your product line with producing PPE, do you have some inventory that is obsolete now that you need to, say, either write off the books, or can you do, put some of your inventory into auction and just get it out just to generate some cash flow? Obviously, with the pandemic and some companies not doing as well as others, being on top of your AR is really important now, even more than ever, making sure you're staying up to date on your collections, working with your clients, make sure you're getting paid, or your customers, make sure you're getting paid. Looking at the capital improvement side, when do you want to spend money? Is it something that you would normally spend money on between now and the end of the year, not knowing what's going to happen with the taxability of the PPP, with potentially another wave of the virus coming? There's a lot of unknowns out there. So just making sure you're staying on top of where you're spending your money and conserving cash where you can.
Yeah, I think just the last thing to add there is, as companies pivoted and have maybe got into new product lines and done things a little differently, and maybe set, a lot of the workforce working from home, just making sure you're keeping tabs on, what are costs doing, especially on the fixed and variable side, making sure that any new costs are being categorized appropriately, factored into labor overhead rates appropriately from there, just to make sure they're on top of things and there's not any surprises down the line. So
with that, Dustin, you have any questions for us then?
Yeah, I have a couple here. First question that came through is from one of the individuals on the call is, in their industry, they're tied to the construction and the hotel industry, and barring the hotel side, construction's been very strong. What other industries do you guys see remaining relatively strong locally through this pandemic?
I think what we're seeing is anything that's related to home goods or to outdoor spaces, anything related to people being at home or improving their home seems to be doing really well, which makes sense when you think about the fact that, people got stimulus payments, And even if they were laid off from their job, they had the extra unemployment benefits. But then in addition to that, with baseball games and travel sports and just all, and a lot of entertainment events and things being canceled or postponed, people aren't spending the money on that, and they're stuck at home. So we're finding that it seems to be they're spending money to improve their house and make it a little more enjoyable to be at home. So anything in that industry seems to be doing really well.
Yeah, and anyone in the outdoor industry as well. So if you're producing anything for outdoors, it's they seem to be really, whether that's swing sets or RVs, all those companies seem to be doing really well. So.
And I guess to get more specific, it's, outdoor furniture, decking, patio products, and that kind of thing. Those are kind of what we're seeing as far as doing really well right now.
Thanks, Ben and Andrew. You guys also focus on supply chain and the importance there. For companies that are maybe not in the past have looked at that, and tried to evaluate it, where would you guys recommend that they start and how to go about that just to try to secure up their supply chain?
I think the most important thing is to maybe just map it out. Start looking at where are you getting your products from, put that on a piece of paper so you can see, who your suppliers are, where they're located, and then start moving that further down the line or further up the line and figuring out where they are getting their products from. A lot of companies, a lot of your suppliers will be willing to work with you and provide you a lot of that information of where they're getting their products from. So just putting it on a piece of paper, mapping it out so you can see the flow of how the product is coming from as far back as you can in raw materials into your onto your shop floor, and just putting that down on a piece of paper so you can see it.
Yeah, I think to add to that too would be looking at your raw material bins and figuring out what are the raw materials that we absolutely have to have on site every day to run the facility versus maybe what are ones that we're only running in production in certain items, once every 3 or 4 weeks, and making sure that you have a good understanding of those critical items. Where are those suppliers at, and where are they getting their materials, and do I have to worry about, potential border issues if they're overseas, or, if they're in a certain state, what's that state's approach to, how does that state approach some of the lockdown measures? So just looking at what are those critical materials that need to be on site, and where are those coming from, and what do we need to do to mitigate the risk of not having those materials on site, whether it's looking at more suppliers, different suppliers having backups or whatever, just making sure that they're able to be there.
No, the last question I have here is, you mentioned a second wave. From your guys' perspective, what would be 1 or 2 items or areas companies should focus on to prepare for that, as we can't necessarily rely on the government to have a second wave of the PPP program?
I think what Ben said about managing your cash. So, everybody knows cash is king, and I think that once again proved to be true throughout this pandemic. Thankfully, the government did step in and provide that cash relief to many businesses. But just, with the end of the year coming and looking at capital investment, and it's not that nobody, you don't want to pull back on anything that you plan to do or that makes sense, but just making sure that looking out ahead, and especially through the first 2 quarters of next year, because that seems to be where a lot of the concern is right now, just making sure you're set up in a good cash position, and considering, do we need to set money aside for potential taxability of PPP or whatever it may be, whatever your major outflows of cash would be, just making sure you have a good handle on that, so you could go into a forced shutdown and without government intervention potentially look to come out ahead. So
the one thing I'll add to that too is just the importance of having a relationship with your banker, making sure your banker is a part of your team who is looking at, they're looking after you, you're keeping them up to date on where you're at and what your potential needs might be. It might be the type of thing where you haven't needed a line of credit in the past, but you don't know what you're going to need in the future. So just working with the banker, maybe opening up a line of credit just to have that available when that cash flow is needed. So.
Perfect. Thank you guys so much. Appreciate all your insight there, and we are going to stay on track here and move to our next presenters. So I would like to introduce our SALT team. They're going to be discussing and presenting on issues for the manufacturing industry. And so first I'd like to introduce Sarah Sparks. Sarah Sparks is a senior associate for Rain Associates, focusing in state and local sales tax with Joseph Pop here. She's committed to handling tax and legal research. She's got over 5 years of experience, and her expertise includes nexus studies, risk assessment, voluntary disclosure agreements, and QuickBooks. Joe Pop is our principal and director of state and local tax services and committed to staying on top of all state and local tax matters while providing extensive internal and external educational programs in an effort to provide maximum client satisfaction. He is well versed in sales and use tax, federal tax audits, state tax audits, and choice of entity. I would like to now move it over and pass it on to our sales team, Joseph and Sarah Sparks. Thank you.
Well, thanks, Dustin. It's great to be here this morning. We're going to go through, in pretty quick fashion, some things that are happening in the state and local tax world. You can see here on our agenda, I'm going to start out with some more general, high-level items, and then Sarah's going to dig into a couple of case studies that we have, very specifically for folks in the manufacturing space. These are real things that we've had for our clients in the last 6 months or so, and so we'll dive right in. So first, we're going to talk a little bit about the COVID phase 1 and phase 2. You've heard a little bit from Ben and Andrew about their perspective and what's coming up with phase 2. I'm going to give you a slightly different look at that with some of the things that we're seeing on the state and local side. And then I'll spend a little bit of time on economic nexus. It's becoming a larger concern now that we're in the COVID world. And as was previously mentioned, there's a lot more sales that are remote from remote sellers, and folks are staying in their homes quite a lot and shopping online. So this is becoming an area of increasing concern. Next slide, please. So when we look at the phase 1 COVID responses from the government, you've heard about the PPP loans, stimulus checks, enhanced unemployment. Primarily a lot of delays to filing and to payments. And I've got a couple of numbers just to show you what the states are dealing with. So of course, these numbers are a little in arrears. This is for the second quarter, and these are all from the Tax Foundation. So the sales tax revenue, which is sort of the canary in the coal mine for state and local governments because it's filed and paid monthly and it's settled monthly, as compared to income tax, which is typically an annual sort of filing. Sales tax revenue was down 9.8% in the second quarter. This is in the face of having the additional PPP money, the stimulus checks, some other things that have injected some money into the economy. And so a drop of 10% is with those mitigating factors being present. As we get into the third quarter, part of that quarter is going to have some of those same pieces in place. And then you'll see the likely acceleration of that loss of sales tax revenue coming down the pipe. Income tax revenue in the same period down 7.1% across the states. Some of that is the delay, the payments for income tax and the like. So some of that is not a real number, but you'll see that sort of trued up with the third quarter numbers that will come out. Excise and property taxes are actually up 3%. So we continue to march along as we move forward in time. And so those taxes are not really impacted by economic activity to a great extent. And so overall, what that picture looks like is that for the second quarter, revenues are down about 4% for that quarter as compared to the same quarter last year. The Tax Foundation is also projecting a shortfall for fiscal year 2020 and 2021 of about $191 billion short of what the state revenues were projected to be. Next slide, please. And so when we get into the phase 2 response, first, of course, we have the response of additional stimulus. As Ben and Andrew were, using their crystal ball a little earlier, I will say that it's uncertain whether or not that will happen before the election. We had the news drop that at least one of the presidential candidates has contracted COVID-19, President Trump, over the evening. No word on Mike Pence and Joe Biden at this point. So, I don't know if that cuts for or against this additional stimulus happening before the election. Who knows? But certainly it's another factor to kind of add into the mix of uncertainty. Phase 2 for state and local is really revenue raisers. So with a shortfall of $191 billion, they got to get that money somewhere. It's either going to be through additional expense reductions, or it's going to come from taxpayers, or it's going to come from the feds. So most state governments can't print money, but the federal government can. So if you are going through and have an opportunity to do some outreach to folks that can do something about this, definitely having the federal government plug some of that $190 billion hole for the states is good, because it means it doesn't have to come from you. So we are seeing, and Sarah will tell you a little bit more about some audit activity that we're seeing right now. But for my part, I'll say that we have seen an uptick in controversy work for manufacturers. These seem to go in phases. So for a while, the state was on dairy related industries. Now they're sort of in the construction, and now it's looking like they're going back to dairy in terms of who's on their target list for manufacturers. You'll see on the slide, there's a variety of different items here that state governments have in their toolbox in order to try and find remote sellers, which typically is, most of our manufacturing client base is remote sellers. I'm going to leave that there, and in the interest of time, just go on to the next slide, and we'll talk a little bit more about that. Okay, so a couple of statistics here that I wanted to give you really quick, and it may be hard to see on the slide, but the sort of light green bars there are after COVID, and the blue bar is basically a year or so ago in this survey, and you can see these are the priorities that folks in the manufacturing space gave. This is from Bloomberg Tax. One notable thing is reducing costs and promoting tax efficiency is sort of the highest priority item. And then some of the items over there on the right side of your screen, looking at tax savings opportunities, improving risk management, those things have become lower priorities after COVID. They're looking at improving cash, as Andrew and Ben had mentioned previously. Next slide, please. And so here, again, specifically for the manufacturing industry are what some of those numbers look like. And so reducing costs and promoting efficiency in tax for internal tax departments in industry, it's a big increase from what it was before. Reducing cash payments and improving rate, again, another big priority. And then risk management has generally speaking, gone down. Next slide, please. There are a variety of technologies that people are using in order to move forward with producing this benefit that they're looking for that you saw in those graphs. Software integrations and RPA are the top two. We'll talk in just a second about one option on the software integrations that we see a lot with the manufacturing group. Next slide, please. Quick flash here, South Dakota versus Wayfair. If you haven't heard of it in previous webinars, seminars in the past, I invite you to take a look at it. This is the big sea change that allowed economic nexus to be the rule of the day for whether or not you have to collect sales tax. Next slide. So for manufacturers, what does this impact? There's two main things, and then I'm going to turn it over to Sarah for the remainder of our time. The first one is exemption certificates. So we have found that when we're talking with most of our manufacturing clients, they have a similar kind of fact pattern, one or two locations, primarily in one state, sales all over the country, and they're selling primarily to people that they believe are tax exempt. And so we've had occasion to our manufacturing clients, either because they're selling, they're doing a due diligence process, or a state has come in and has challenged them on this and wants to know specifically where's our documentation. We've found that between 85 and 95% compliance is about the best you get if you don't have a system, a pretty robust system in place. And so what that means is that you look at your sales, 5% of your sales times about 10%. That's a good, ballpark of risk for sales tax with penalties and interest. So if you do not have a strong exemption certificate program, that's about the risk that you're running. And so one of the things that we would suggest doing in this period before the states start coming with additional controversy work is to make sure that your exemption certificates are up to speed. The other thing, and the last thing I will mention, is if you go to the next slide. When you are buying things in from out of state as a manufacturer, many times you are exempt with a lot of those things, but sometimes you're not. The economic impact of the Wayfair decision on you may primarily be, if it's not on the sales tax side, it may be in this area, which is where you have vendors that are selling you things. They're not charging you Ohio sales tax, as an example. You go along with that because, again, you think you're exempt, and maybe you are. And then it turns out that the vendor gets audited, and they believe that the things that they are selling to you are taxable. And so you have this sort of unfortunate set of situations there at the bottom where they'll ask you to pay the tax. You could pay it, you could refuse to pay it and get ratted out, to the state tax department. It's really sort of a difficult situation. And so those are the two main things that we're seeing on the manufacturing side. Let me turn it over to Sarah Sparks for some additional specific content.
All right, thanks, Joe. So I just wanted to share with everyone a couple of recent examples of us working with manufacturing taxpayers regarding their sales and use tax needs. First of which is about a taxpayer who is working with a general contractor to build a new manufacturing facility here in Ohio. And then the second example covers a recent Ohio use tax audit that we worked on with the taxpayer and what the results of that audit were. So in this first case study, we worked with a large manufacturer here in Ohio to help determine what purchases for their new manufacturing facility build should have sales tax collected on it by their general contractor and what items should be exempt. A little bit of factual background about this facility build. So in addition to the manufacturer, we had their general contractor who was invoicing them for all of the construction work. The general contractor was also directly providing some asphalt and concrete services for this new facility build. The general contractor had subcontractors coming in to provide other construction contract services like HVAC, electrical, plumbing, framing, drywalling, and roofing. And finally, the general contractor was also using outside vendors to supply furniture, signage, and manufacturing equipment, along with installation services of these items. Next slide, please. So the manufacturer brought us in to see if any of these items on the invoices from the general contractor needed sales tax lines added to them, or if the manufacturing exemption applied to any of the construction contract services broken out on the general contractor's invoice. So some of the services we provided for this invoice review included first looking over the invoices and blueprints for this facility build. The invoices would give us the current list of construction contract services and equipment that the general contractor was charging to the manufacturer, while the blueprints would tell us which of these construction contract services and equipment purchases fell within the manufacturing process. We then provided the manufacturer and general contractor with our determinations of which items on the invoices and the blueprints were exempt from sales tax and which were taxable. So to assist the manufacturer and general contractor with being able to claim the exempt items as exempt, we completed and provided the general contractor with a resale certificate to provide to the appropriate vendors and subcontractors. And we completed and provided the manufacturer with an exemption certificate they could give to the general contractor to support their claim for exempt purchases of manufacturing equipment, the installation services that goes along with these items, and the applicable electrical, plumbing, and HVAC services that were used to connect the equipment to power sources that were specifically for the equipment. Likewise, we worked with the general contractor to add sales tax line items to their invoices to the manufacturer so they could collect sales tax from the manufacturer on tangible personal property that wasn't being incorporated into real property as a construction contract service or didn't fall within the manufacturing exemption. Next slide, please. So the end result of our review and invoice consulting work was that we were able to help the manufacturer save around $100,000 in sales tax that the general contractor may have wound up charging them otherwise because they didn't have the expertise in place to know what was taxable and what wasn't when they were first invoicing the manufacturer. Moreover, both the manufacturer and the general contractor were able to obtain some guidance of when to pay sales tax and when not to, which they can utilize going forward with other manufacturing facility build projects that they might have. Next slide, please. So for my next case study, this one is specific for an Ohio manufacturer who was audited by the Ohio Department of Taxation for use tax. The look back period of this audit was 74 months. This look back period is usual when a taxpayer has never had a use tax account in Ohio, which was the case with this manufacturer. For most taxpayers that have a use tax account, the usual audit look back period is about 3 years or 36 months. Now, this manufacturer didn't have a lot of sales and use tax accounting controls in place. Instead, they generally relied on their vendors to make sales tax collection determinations for them. Next slide, please. The manufacturer reached out to us here in Ray's State and Local Tax Department to assist with defending them in this Ohio use tax audit. And helping with this audit defense, we were able to provide the following services here listed in this slide. We had initial discussions with the auditor to discuss the timing of the audit and lay out a next step plan of when and how documentation would be provided so we could help control what was being given to the auditor and when. This helps with the taxpayer's ability to use internal resources in the most efficient way for an audit, so they can also still have time and resources to focus on regular business tasks. We also reviewed the manufacturer's chart of accounts and trial balance reports for potentially problematic accounts to determine if account name changes were needed. By changing account names, we can more accurately tell the auditor what's in these accounts before giving him detailed general ledger data that lists out purchases specifically, to help him narrow his focus to accounts that are typical of an audit and not to try to get get him to steer clear of accounts we may not want him to look at. We also worked with the auditor to get a block sample period with a statistical sampling of that block period selected for the invoice review step of the audit. This reduced the number of invoices the manufacturer needed to pull for the audit's invoice review step. And just for reference, the block sample period means that the auditor just selected to look at one 12-month period out of the entire 74 months, which was the length of the audit look back period. And then a statistical sampling means that of that 12-month period, a smaller sampling was selected for invoice pulling and review. We also obtained a waiver of the audit statutory deadline to buy us more time to work on the audit. And for the work on pulling invoices, our SALT department provided the manufacturer with our staffing resources to have us on site to pull the invoices requested by the auditor. We then reviewed the invoices we pulled and provided them to the auditor along with our taxability determinations to argue statutory and administrative exemptions to help reduce potential sales tax liability. And next slide, please.
Sarah, we have 5 minutes left here. If you could wrap up here so we can take a couple questions, that would be great.
Yeah, absolutely. Okay, so then the final results of this audit, the preliminary findings were that the auditor initially wanted to assess the taxpayer $1.5 million of use tax. And with our work on the audit, we were able to reduce that assessment down to $294,000, which was an 80% reduction from the preliminary results. And then finally, our fees in total were about $69,000, which with the $1.2 million of savings and potential use tax due, we were able to save them more than 17 times their fees on this audit. So next slide, please. And then I'm just going to kind of brush over what we're doing going forward. So going forward, we are assisting the taxpayer with use tax accruals for the open period after the audit. They haven't been filing their use tax returns yet at the conclusion of the audit look back period. So we're currently just going through their trial balance reports, detailed general ledger reports, looking for those vendors that the auditor held as taxable during the audit, and also looking for other vendors that may also be taxable that weren't reviewed under the audit. And at the same time, since we have those reports, we're also looking for refund opportunities where the manufacturer might have overpaid sales tax to their vendors because they weren't aware otherwise if their manufacturing exemption applied to those. Okay, so, and then next slide, please. And I'll just go ahead and let Joe discuss the projects that Ray's SALT team can help assist taxpayers with, especially those in the manufacturing industry. And I think you're still muted.
Yeah, thank you, Sarah. Dustin, do we have any questions, or else I can go through some of these?
I think one of the questions, Joe, might lead into this. So let me ask the question, and then that might lead into your project. Is there any exercise that we can go through as a company to review if we're paying the appropriate amount of sales tax to the state of Ohio?
Yeah, absolutely. So we have projects, both large and small, sort of in that space. These are also things that you can do a little bit internally yourself. You know, one of the things that I mentioned previously was exemption certificates. So if you're getting, you know, all of your clients' exemption certificates, that's really the best thing that you can do on the sales tax side of the world when you're selling things. If you don't have an exemption certificate from them, then you got to charge them tax. It's as really as easy as that. On the use tax side, which is what Sarah was just talking about, there's a number of things that we do. If you see on this slide here, the green items are really things that are designed to put money in your pocket. So as Sarah mentioned, you know, if we do a use tax audit defense, our goal is to save you a multiple of what our fees are, and we're almost always successful in doing that. The things that you could do internally to take a look would be, what kind of controls do you have, right? And so without having to go to a CPA firm, anybody else, go to your internal tax function, or if you're your internal tax function, you know, ask yourself, when I have an invoice that comes in, do I know whether or not sales tax should be on it? It's got it on there. Should it be? Do you have a process to like go through that? And then if an invoice comes in and it doesn't have sales tax on it, do you have a similar kind of process or control to say, should it have sales tax on there? That's really the very first step. Diagnosing these issues are usually not very difficult. Fixing them tends to take a little bit of time, but in terms of what you can do, you know, right now today, take a look at your exemption certificate management and take a look at your internal controls when you have, you know, invoices coming in, whether it has sales tax on it or not. That's a real easy thing to get started with. Any additional questions, Dustin, or with a minute or two left, I can go into a few more of these.
Yeah, if you want to go through those real quickly, we have about 2 minutes left here. That was the question that I had.
Okay. So, you know, as Sarah had mentioned, on the 2 case studies that we have, this is really a great opportunity with your construction contractors. Most of the time when we're doing state and local tax presentations for construction contractors, we're talking about the manufacturing exemption. Because often, you know, the ship has sort of sailed on the construction contract complexity. A lot of them know what those complexities are. They really don't understand the complexities of the manufacturing exemption. And that can result in a huge amount of additional tax being on an invoice. So for example, on one of the things that Sarah had mentioned, you have, you know, a vendor over here charging tax to the sub. The sub is then charging the GC. The GC is upcharging what the sub charged and charging the client. And so you got upcharges and sales tax on the sales tax that should never have been charged in the first place. So it's very easy to get, you know, big dollars if you actually have someone take a look at those things. One thing I'll say is, you know, as we're looking toward the phase 2 of what the state's responses to COVID are going to be, keep an eye on whether or not the state tax relief, state revenue relief, I should say, and the federal stimulus bills. If you do not see it, most likely you're going to see either new tax types, like the gross receipts tax that I didn't really get a chance to touch on earlier, additional audit activity and the like. And to get yourself ready for that, there are just a couple of quick things you can do. I already mentioned, you know, some of the easy ones. As you go down into these different service offerings that we have, really the red ones are not going to put cash in your pocket, but they're going to reduce your risk. The green ones are going to put cash in your pocket, whether as a direct savings or in the refund, actual cash that's going to come from the state based on things that you've already paid tax on that you didn't have to. So we have a variety of different services at different price points. You know, transactional tax audits get expensive. So you saw that for the $69,000 number. Don't get scared with that. A lot of our projects are in the $1,000, $2,000 space. A lot of this you can do yourself with our help. So don't feel that you shouldn't reach out. If you have a question, let us know. We've got a great SALT team here at Ray, and we'll definitely help you as much as we can. And whether that's a project small, large, or just you know, answering a couple of questions, glad to help.
Thanks, Joe and Sarah. We appreciate all that you've talked here, and everyone on the call. If you guys have any additional questions, please let us know, and we'll follow up with Joe and Sarah and get those to you. I'm going to transition here to Sean Richardson, who's going to be talking on the cyber side. Sean Richardson is a principal at Rain Associate, as well as a retired U.S. Army Master Sergeant and former cybersecurity advisor to the Army Reserve Cyber Operations Group and the U.S. Cyber Command. With more than 25 years of information systems engineering and cybersecurity operations experience, he leads the firm's cybersecurity service team. Sean is committed to help guide the small to medium-sized businesses of America down the path of entrepreneurial freedom without the risk of compromise. Sean, if you're on the call here, I'm going to pass it over to you.
Good morning, everyone. Hope everyone's enjoying our presentation this morning. Thank you for the introduction, Dustin. So really grateful for, just want to call out one of our partners and sponsors here today, the Ohio MEP South Centers there at Ohio State University in Piketon. We've been working with them on some projects to do some COVID assessments and some disaster relief assessments, and we just really appreciate their partnership and what we're doing there. So my agenda today is going to be kind of building upon what Ben and Andrew were talking about, what's going on in the manufacturing space as it relates to cyber and information security and technology. So, you know, I'm going to touch on what we're doing for our clients now, what does cyber risk mean, and what breaches mean in the result as a result of COVID, and also talk about any recommendations and share those with you today. So next slide here, and we'll get started. So here's just an overview of kind of some of the things we've been talking about already. We talked about PPP task force. We've got some HR consulting going on with Renee West, and just CARES Act and some other things, and of course our cyber advisory services. So Next. So this slide's depicting really, kind of everybody's scrambling, right? So, what does cyber risk mean? What does information risk? Andrew talked a lot about, leveraging technology. Well, while you as a manufacturer are leveraging technology to improve your efficiencies, there is someone behind the scenes that is attempting to thwart or exploit those information systems or your information systems within your business. So when we talk about scrambling, that means most companies are really not prepared for that. What should I be looking at? What steps should I be taking to protect my information systems, my intellectual property, my client base, and so on? So a lot of times a business continuity plan or a disaster recovery plan doesn't even exist. So the other pieces too are you may not have staff on your inside your environment that has the expertise or oversight of that. So and then lastly, really cybersecurity in the information systems realm, just in general, in IT, putting that cybersecurity layer over that is been really overlooked and can be overlooked because there's really no budget for it. I'm just going to wait until something happens type of approach. So what does that mean that you should be taking steps towards maybe having a trusted advisor continuously monitor your environment and or take a look at what those information systems controls are, because really they're after your intellectual property, they're after your money, and so we'll talk a little bit about that today. So I'm going to share a few examples of three primary cyber breaches. What is a breach? Now, I will share with all of you the term breach is technically a legal term. So you as a business owner claim that you have been breached, you have a legal obligation to see that through. And so just a food for thought there. Be careful with that word. And so a lot of times in this example here, a breach is really an incident. Something happens where the network goes down or some software becomes unavailable. That's not necessarily a breach. That's an incident. So massive impact to your operations could mean due to downtime and loss of revenue and so on. So this type of disruption of service incident is not necessarily classified as a breach because there was nothing stolen or taken. But it still has an overall impact inside your environment. Next slide. So the second example is actually when a breach happens and there's theft. So that means access has been unauthorized access has been given or taken, if you will. A system has been compromised and some sort of fraudulent activity has been executed. Money, assets, intellectual property have been stolen or left your environment. Okay. Next example is number 3, please. Next. All right. Is the actual copy breach. So this is where data has been either locked down with some sort of ransomware or physically exfilled or exfiltrated from your environment. So that means, well, what does that mean to you as a manufacturer? That could be your client database. That could be your QuickBooks database. That could be, the information that is sitting on a manufacturing machine that has the special sauce of what widgets you're creating or some sort of food that's being produced or what have you. That average cost, folks, it can be upwards of $1 to $3 million just if it's found. And the key thing there is if. A lot of times a breach like this is not even detected for a longer period of time, upwards of 6 to 9 months. So just just some examples there. Next. So here's an example of a family-owned company. In fact, it happened this year during COVID, where ransomware and we'll keep this all not not bore you with a bunch of technical jargon, if you will, but the type of ransomware in this case was CryptoLocker. The business had no knowledge of this happening until they were notified by the extortionist that their information had been compromised. And so therefore, what happened at that point, their local managed service provider or their IT team attempted to intervene, and they ended up making things worse. And so we engaged our incident response team right away. We were able to start communicating with the extortionist and reduce that cost down to almost nothing. Just give us something for the data, and we'll give you the keys back. Now, what does that mean inside your environment in manufacturing space? I will be very frank and honest with you. In most cases, in this particular use case, most cases, this doesn't happen. The data typically doesn't get recovered. And oh, by the way, they entice you to pay money to try to get back that information, and then they're gone, they're out. So there's been some other examples, and you can look these up on, there's a public website that has healthcare breaches and some others, but in most cases, you never see your data again, nor your money. So think about the downtime to your company, right? Think about the brand degradation. Think about the cost of the annual sales being reduced. So the total cost to this business without our incident response team or a incident response team could have been in excess of $100,000. And just to an organization that has about $2 to $3 million in sales annually, in this family-owned business example, that is significant, right? So on the right here, we've depicted some of the things that you should be doing inside your environment: implementing, monitoring, testing, updating, patching your systems, you as a business owner, how cool would it be if you had a dashboard of consistent reporting? Where is your data going? In most cases, you don't even know where your data sits, whether it's leaving your organization or whether it's not. Is it encrypted? And then lastly, all of you work with third-party vendors, right? So think of the risk that third party could potentially bring into your environment. They're coming in to offer you a service or support your organization, and in some cases, I would debate that they're not really worried about your information systems. They're just there to do a job. So a really real life example here of a breach that happened just this year. Next. All right, so regulation is coming, folks. There's some of you that may bid on projects for the government, and you're familiar with 800-171, the new CMMC that's launching. That's the cybersecurity maturity model, and we'll go over that and touch on that briefly here at the end. But these different industry groups are forming and establishing guidance and regulatory frameworks that you as a business owner should follow. Now, I use the word should. It's moving towards it's going to be required for you to do business, because if you look at Senate Bill 220 for the state of Ohio, and that's the Ohio Cybersecurity Safe Harbor Law, okay? It's about 22 pages long, and we can send a copy of that over to you if you need. But if you look up Senate Bill 220, it indicates that you as an entity, if you can prove that you have the appropriate safeguards and framework in place and controls inside your business, if you get breached and compromised, you could have a reprieve against some sort of regulatory fines, because you will have folks knocking at your door if there's a loss of client data, credit card data, those two things especially. So just keep that in the back of your mind. A last point I want to make is since COVID began and we're hopefully coming out of that, attacks have been up 400%. And our threat team is constantly in contact with these other networked threat providers that I've had established relationships with US Cybercom and other entities with Homeland Security that these attacks are just rising. And one of the number one industries that are being affected is all of you. So we want to highlight that today, not to scare you, but to be very transparent and real as you continue to grow your companies through this crisis. Next. So what recommendations can we make to you? What takeaways can you have right away? So what we're suggesting to our clients, we've got a bit of a free assessment. We take a couple hours with our and actually run through with them a list of kind of questions, but very tangible in-person interaction on how we could reduce risks. So we would recommend that as you slowly migrate back into the office, most of you have still been in the office, as it was previously indicated that manufacturing is kind of a necessity, if you will. You should consider doing some sort of assessment on those information systems and or just your network as a whole. Okay, set expectations with your staff members and third-party vendors on what cybersecurity awareness looks like. Go through some sort of training. If you don't have a trusted advisor inside your business, hire one. Reach out to us. Talk. We want to. It's like Joe Pop had mentioned with the SALT team. We want to have a conversation with you because we want to help. It's important to us that my why is served for several years in the uniform. We want to serve you as a manufacturing community and as the foundation of our country. And then lastly, go on a data diet. What's that mean, right? Analyze what true data you have in your environment that could be bringing risk to your business. So, assist your clients in doing the same, reduce that attack surface. And those are all things we can talk to you about. The 5 things you should be doing right now. 1, test your critical data, understand where it's going, where it's at, maintain proper updates and patching, continuously inventory your assets. That's a big one. Like if you don't know where all of your assets are, computers, workstations, servers, laptops, mobile devices, huge point of reference there. Then that's something we can help with as well, or at least coach. And then lastly, train your employees on threats and routinely do some sort of quarterly risk assessment or annual risk assessment. Next slide. So our approach, what we do here at Rain Associates Cyber Services and Data Protection, we have a unique hands-on approach. And what does that mean? We take the approach of a defense in depth. We don't come and barrage you with a bunch of technical jargon. We want to understand your goals and your business strategy first and align those with technology controls, okay? We have a program called Ignite Your Compliance. It matches with several regulatory frameworks. Leading framework is the National Institute of Standards of Technology Cybersecurity Framework. It's 106 controls with 23 sub-business categories of what, as a holistic organization, what controls should be put in place in your business. Okay, we are a data-first organization. So when the day begins and the day ends, the threat actors want your data. They don't care about what firewall you have or what type of computer you have, because guess what? They're already in. They blow right through that. They just want to know where your data is at and what type of data they can get. We are framework focused. So what does that mean? That means regulation matched to your business objectives. And then consistently doing vulnerability assessments. That's something we specialize in. And really, we want to identify right away anything that's hot, sharp, and dangerous in your environment that could bring risk to potentially closing your doors. An example there, and again, this is not to scare anyone, but this is very real. Last winter, there was an organization in Dublin, Ohio, that was open for 12 years. They were an e-commerce facing organization through the internet, but they had a brick and mortar place, and everybody came to work, and they were hit with a really hard breach and ransomware, and literally closed their doors, stopped their operations, and had to let everyone go. So this is real. This is real tangible advice, folks. Next slide. All right, why is manufacturing being attacked? Well, frankly, companies have a wealth of information, right? There's several use cases where we've had our enemies, we'll just call them that, across the pond, if you will, that potentially want to take a look at what you're manufacturing, so they can take those plans and make them cheaper and sell them for a cheaper cost, right? So, building specifications, financial accounts, and so how are they doing that? They're leveraging email attacks. They're leveraging mobile attacks. I will tell you right now, if you don't understand what the social engineering scam is, I'll give you a brief example. I was at a client this last fall. I had been in the client as a trusted advisor for 2 days already, and the third day I showed up in a flannel, a ball cap, and sat in the front lobby. This was a healthcare organization. Sat in the front lobby for about 20 minutes before someone asked me if I could be helped. I played a local third-party contractor from a roofing company, and within 30 seconds gave me complete access to the servers and all their information systems, to include healthcare information systems that had personal healthcare information. So social engineering is very, very prevalent and is very easy. Next slide.
Hey, Sean, we have 3 minutes left, and I have a couple questions that have come through. I didn't know if we want to go to those questions.
Yeah, so let me finish up with this slide. I think we're towards the end here, and this is going to be brief. One of the things that I feel important to touch on is this guidance coming down. So this maturity model certification, the compliance was released earlier this year. We have a team specialized in CMMC, and we can help your organization meet all of the different levels required in order for you to be able to be compliant, but also be able to compete for those contracts and so on. Next slide. I love this slide here. You see, that big tidal wave coming. All of us have felt that all through COVID. One of our security practitioners, who's a Brit and very well respected in the industry, made this statement a few months ago. And we've got all these applications and all these people and all these devices, and yet information security is still overlooked. So we'll go ahead and take some questions. I think we have one poll question maybe. I don't know if we're going to do those today, and if not, that's fine. But go right ahead, Dustin.
Thanks, Sean. No, I love that picture, by the way.
Yeah.
So first question is, domestically or internationally right now, I know you're talking about regulations coming. Are there fines and penalties that can be incurred at this point prior to some of those new regulations coming down if an attack happens for your company?
Yeah, so that's a great question. The answer to that is yes, because if you're not protecting others' intellectual, if you're not protecting your others' identity, personal identifiable information, credit card numbers, financial account numbers, and so on, and you are the holder of that information when it gets out, then legally you can be bound to being, charged compliance fines. An example, you mentioned international, is GDPR. So that stands for the General Data Protection Regulation out of the EU. That doesn't just apply to the EU, to the European Union. That also applies to companies that do business with companies within the EU and abroad. So what does that mean? You can look at this, you can look up the details of this later, or we could send you some information. But in essence, if Dustin Raber is a European Union citizen and his identity is on one of your systems, or a identity from somebody in the European Union is on one of those systems, and there's a transaction that takes place and his individual identity is taken from or stolen or brought out of that entity, you could be charged 4% of your annual revenue in fines just for that one identity. It's extremely, extremely costly. More importantly, the regulatory frameworks and guidelines that they're implying that we all need to follow, that's all coming. And people are following. New York DFS, the state of New York, for instance, has got some of the most strenuous certifications and regulatory controls in the entire United States. There's about 40 states now that are doing very similar things as GDPR and Ohio Safe Harbor. So yes, the answer to that is yes, absolutely.
Thanks, Sean. I know we have a couple other questions, and I apologize. I want to stay respectful for the next presenter. We'll get to your questions and get those out to you guys as you're asking them. So thank you, Sean. I'm going to move to Renee West in our Human Resources Department. Renee is a senior manager and leader of our Rain Associates HR consulting practice with more than 27 years of experience in human resources. Renee specializes in assisting organizations within manufacturing, not-for-profit, and contingent staffing, food and other industries with their HR challenges. She is also currently serving on the Ohio Society for Human Resource Management Board of Directors as Central District Director. Thank you, Renee, for joining us today, and I'm going to pass it over to you.
Good morning, everyone. Thank you, Dustin, for that introduction. We appreciate everyone joining us this morning. We do have a lot of information to cover here today, and definitely we'll be able to take questions as we move through the process here. But topics that we're going to start talking through today include looking at the labor market review, also looking at employee recruitment and retention, which is definitely a very hot topic right now, and also looking at some topics under employer compliance, specifically related to COVID-19, employee books and trainings, and also touch base on some safety policies and procedures to ensure your employees are safe and your organizations are compliant. Next slide, please. If we look at some of the statistics recently from the labor market, the U.S. regained 1.4 million jobs in August. Our unemployment rate dropped to 8.4%, which was down from the peak in April of 14.7%. Our unemployment for the state of Ohio fell 0.1 percentage points in August 2020 to 8.9%. So we're on the right trend of the unemployment decreasing, and the unemployment rate in Ohio peaked, as we said, back in April at 17.6%. So we're now looking at 8.7 percentage points lower, which is a very positive trend. Next slide, please. If we talk about recruitment, which is definitely a very big topic right now in organizations, a lot of companies are continuing to hire and are looking for that right fit for certain roles within their organization. So best practices that we like to help clients with is, what are the best strategies to help you recruit and find that right person? Being specific in your job descriptions and your postings is very crucial. Also looking at what are the essential skills that are needed for this type of job. And at the firm and a lot of our clients, we utilize what is called the predictive index, which is a pre-screening assessment administered to candidates for your position that can help determine their particular competencies and ability to perform certain jobs. So definitely a resource that we found to be successful in helping to find that right fit for employees. And another good practice is looking at your recruitment internally. Do you have any employee referral or incentive programs? I spoke with a couple clients yesterday that are actually seeing a positive increase in the number of employee referrals internally that they're seeing. So they've looked at increasing their employee referral to reflect that and thank their employees. So look at what you have from an internal perspective to help you recruit individuals as well. Next slide, please. As we talk about recruitment, it's also important to look at retention and those employees that you currently have now, ensuring that you have a competitive wage and benefit package. So what does that really mean? Looking at your insurance benefits, medical, dental, vision, life. We're not saying that you need to have all of those, but having a competitive package helps set you up as an employer of choice. And with the market the way that it is, you definitely stand out as one of those employers in the area. Also offering paid time off like vacation time, sick pay. It's also a positive benefit. 401k and profit sharing is also very, very important. One of the other items that is definitely helpful from a retention perspective is providing your employees with consistent performance coaching and feedback. Again, it does not have to be a long process, but taking time to provide your employees with feedback throughout the year on how they're doing. People want to know, are they doing a good job? Do they need to improve on anything? So this is a great opportunity to, again, help with that retention. And training and development programs, we've definitely seen a lot of organizations, especially during the pandemic, that might have had a decrease in the workload, that were able to really help train and develop some of their employees by offering time for trainings that they might not necessarily had when they were had during peak production times. Next slide, please. Employee retention, again, looking at who you currently have working for you, and stay interviews is something that we help clients with in talking with your employees and asking them, why is it that you're staying here? What benefits do you like? What are your thoughts on our organization? That helps you to then be able to externally promote that and market what you feel your employees are staying for. So that's very important. Completing employee surveys, not anything that needs to be very extensive, but having a third party come in and that with your employees to gain their feedback on what benefits do they like and how is the organization. Also looking at employee recognition programs and service awards. Do you have any type of company certificates or different types of acknowledgments of employee retention? One of our favorites always is cookouts, some type of food. It's always a nice thing to thank employees for being there every day. And it can even be a healthy option as well. So keep that in mind. Next slide, please. So let's do a quick poll question. We are definitely curious in knowing if your organization right now is currently hiring for any key talent. If you could take a few minutes to answer yes or no. We look forward to seeing that. This also helps give us a little bit of an idea from a perspective of what companies are doing, and are they still continuing to try to recruit those key individuals. Thank you for voting. I think we should be about ready to show our results. Interesting. So, attendees are currently looking for talent. That is very high and very crucial So it's a good thing to see that companies are still looking. However, it also reinforces the point of strategically recruiting and retaining who you have. So thank you for sharing that. Next slide, please. We wouldn't be talking about HR if we didn't talk about compliance. So what can organizations do to ensure that their company is compliant and they have resources that are ready for their employees? Employers should ensure that your employee handbook and safety policies are updated. The employee handbook is a reflection of your organization and helps your employees to know what the benefits are and help answer any questions they might have. It also helps you from a compliance perspective and risk mitigation, that if you have policies in place, you can show these are what we adhere to and these are what we implement here at our company. And also the biggest piece of an employee handbook is that employee signature page. That is the documentation to support that your employees receive the handbook, they understand the regulations, and that they have an avenue to go to if they have questions. In the event, hopefully, you would not have any legal issues, but if you were to have a lawsuit of some kind, the attorneys are going to want to see your employee handbook as one of the very first items. Next slide, please. So as we talk about compliance for the handbooks, with COVID in play, it's important for employers to keep in mind that there are existing regulations now for paid sick leave under FFCRA and the CARES Act. A lot of employers are thinking that possibly, since the virus hopefully is going away, that this is not in play. However, these regulations are in effect through December 31st of this year. So ensuring that your companies have the postings up for the emergency sick leave, the criteria, and also that your policies are well known and spoken to at your organization. And if you have questions on these specifics, reach out to us. We're happy to help here with those questions. Also looking at your handbook from an ADA perspective, the Americans with Disabilities Act. Also looking at, as we know, none of us would have thought that we'd be going through a pandemic, but what are your pandemic and emergency preparation policies? What do they look like? What does your attendance look like from a policy perspective? What are those expectations? And also your paid time off. How does that apply to take leave? So a lot of information there, but definitely resources that you want to be sure are in your handbook. As we talk about compliance, we also want to talk about employee training. So what should organizations do from a compliance perspective for their employees? One of the most crucial trainings that you should do include harassment and sexual harassment. This should be conducted annually for all employees in your organization. And also there should be a separate training for your supervisors and your managers on harassment and sexual harassment as well. Specifically, those are your first point of contact that an employee is more than likely going to report any potential issues to. So those supervisors and managers need to know how to react and what to do in those situations. Also looking at workplace violence. What are your policies to protect your employees? What happens if there is an active shooter on location? So just things that you need to be prepared for and that your employees need to train for. And as we talked about, supervisor and manager trainings, for evaluations, for just normal supervision are always helpful as well. Next slide, please. This is our last full question here. We are curious as to how recently your organizations have updated your employee handbook. If you could help us, if it's been within a year, if it's been longer than a year, or if you don't have a book. And employee handbooks, as we're waiting for the results back here, do not need to be 50 pages long by any means. They can definitely be compliant while still ensuring that they're relative to your corporate size as well. So we have a few more minutes here for the poll. Okay, so it looks like we have about 53% have updated their handbook in the last year, 42% longer than a year, and about 5% that do not have a handbook. Again, thank you for taking time to answer that poll, and definitely, please be sure that you do look at your policies and your handbooks. So as we continue to talk about policies, let's talk a little bit about safety policies. And specifically, how can you ensure your workforce is safe, especially during the pandemic? And we're not sure where things are going to be as that moves forward, but being sure your employees are trained on the new CDC guidelines. What are your expectations from an employer standpoint of mask wearing, et cetera? So be sure that your workplace has your posters up and everything as well. Also looking at accident reporting process. Should there be an accident in your organization, do you have an accident form? Do you have a process to review near-miss accidents, especially from a manufacturing perspective? What could you possibly do differently to put corrective actions in play to ensure the safety of your workers? Also looking at, again, training and documentation for some safety matters as well. Bloodborne pathogen is definitely, one of those top trainings. Hazardous communications, if your workplace has any chemicals or hazards that they're working with. Without tag out, if you are having machinery, it's important that individuals know the process for that. Forklift safety, being sure that your forklift drivers are certified, that they go through their training as well. And also look at any industry-specific training to your organization if you have construction or different pieces of your organization that are specific. Next slide, please. So that was a lot of information. So recommendations, what do we recommend for you? One of those is looking at completing an HR audit of your current policies and procedures, looking at your I-9, your labor policies. What is your overall strategic policy and recruitment? And that is something that Ray can help you look at. So determining from point A to point B, what does your entire process look like from that HR perspective? Also, again, looking at your workplace employment and safety, being sure you have posters and being sure you're consistently enforcing your safety of the workforce, doing your employee handbook and updating your policies, conducting your employee trainings. And one of the biggest recommendations that we can make is consistent and timely communication with your employees. Especially now during the pandemic, it's been challenging for employers and employees that are dealing with possibly items outside of work. So again, continue to reinforce and support your employees and provide that consistent communication. It's very much appreciated. We also have provided some resources here for you in the event that you do have additional questions. The Department of Labor, the EEC. We also have a website for Ray that is specific to COVID-19 and a resource for employers if you have questions or need help with particular types of updates. And the CDC guidelines and websites are also listed there for COVID, which, as we know, continues to evolve. So it's important that you as employers stay up to date on those changes and regulations as we move forward. And Dustin, are there any questions that we might want to address now?
Yeah, I have a couple, Renee. I think first one that came up is with COVID-19 and the work from home environment, are there a couple new policies that should be in place just to help during that time as we have a new environment that we're working in?
Great, that's a great question. And yes, there should be additional requirements that you're looking at from that. One of those would be a remote workplace policy. And, there are templates available for that. We're happy to help, organizations look at that as well. It also opens up, as, Sean spoke earlier in reference to security and cyber security. If you have employees working from home, you need to ensure that there are no risks with your confidential data being, shared. So looking at those policies, are very crucial, especially as we move to more of a consistent remote workforce moving forward.
Next question, does Ray offer any HR consulting based on company size and need?
Yes, good question. We do, and part of what we do here at Ray is working with companies from small to medium sized to larger organizations. We have different packages from help you with working with your employees on surveys and helping strategic recruitment and job postings. And we cater those specifically to your organizations and your size. So please visit our website, and we're happy to help with that, and contact me anytime. I always have time for questions and enjoy talking with everyone.
One of the other questions is, does a company need to be a large organization to need an employee handbook?
That's a very common question, and no, the company does not need to be large. We've worked with companies that have 5 or 6 people. It's important that the policies that you have apply to employees, whether you have 5 or 6 or you have 100 or more. There are some specific policies that apply to larger employers, but having a consistent policy for your employees also shows that even though you might be a small organization, it's still important that you have procedures and expectations, and that you have information to share with them.
Those are all the questions, Renee. I guess we have a couple minutes here left before we move to the next group. Is there any other highlights or items that you'd like to reiterate or highlight here before we complete this?
Sure. So one of the biggest and I'm glad we have a few extra minutes. We're still continuing to receive a lot of questions from employers on COVID-related questions, specifically if they have employees that test positive, or, what are the resources out there? And, my first recommendation is to look at the guidelines, talk to resource your local health department. They are a free resource for you. There are 1-800 that you can contact a hotline and talk specifically to individuals in reference to any questions that you have. Scenarios and different measures of courses of action, that it is confusing, and I understand that, and I've been in HR for years, so knowing that these are uncharted territory, feel free and reach out to those resources. Also with other organizations in your area, but we also caution individuals to be sure that not everything you see on Facebook is accurate. Not everything you see on the internet is accurate when it comes to the COVID and those regulations. So be sure that the resources that you're looking at are those valued resources, and that they're accurate, because there's a lot of different things out there right now.
All right, thank you so much, Renee. We really appreciate the time that you spent with us here. We are going to transition to our panelist portion of today. So to conclude Manufacturing Day, attendees will gain the opportunity from insight into the perspective from an accountant, Kyle Stemple, attorney Garrett Roach, banker Rob Hunter, and financial advisor Darren Brooks in regards to the current economy uncertainty and the effects COVID-19 has on the manufacturing process. Before I end up going in and introducing each one of our members, I do want to just highlight and give the opportunity for any attendees, if you want to send any questions in to ask specifically to one of them, please let us know as we're accumulating those questions. If we don't get through all of them today, we apologize, but we will get answers to those and get them out to you after also. So brief introductions here. Kyle Stemple is the Regional President of Rain Associates and past Director of the Manufacturing and Distribution Services. Kyle specializes in consulting, tax, and audit services. With more than 15 years of experience, a few of his areas of expertise include manufacturing, accounting and consulting, business operations, Lean Six Sigma, and succession planning. Garrett Roach is a partner with the law firm Critchfield, & Johnson, and he's located in the Millersburg office. Garrett has roughly 28 years of experience, and his primary area of practice is business law. He works with business owners and their families on matters such as entity formation, contracts, mergers and acquisition, and succession and estate planning. He has extensive base of clients in the manufacturing and construction-related industries. Rob Hunter, Senior Vice President of Commercial Banking at People's Bank. Rob is responsible for all aspects of commercial banking and business development in Holmes County and the surrounding counties. Rob brings 21 years of business banking experience to the People's Commercial Banking team. Darren Brooks is an investment advisor representative based out of the Mentor Office of Investment Partners. Darren has obtained FINRA Series 7, 63, and 65 security certifications as a registered representative of Commonwealth Financial Network. His areas of focus are accident and health, variable annuity, and life insurance license, as well as the accredited investment fiduciary designation. Thank you guys for joining us today. As we get in here, I do have a list of questions that we're accumulating. I think what we're going to start is we have some individual questions that we'll focus on before we open it up to the group for some questions that you all can discuss. First, Garrett, I'm going to start with you. With the recent passing of Ohio House Bill 606, could you describe a little bit of what that means to our manufacturing community as it focuses on immunity granted employers from COVID-19 related lawsuits?
Sure, Dustin. Thank you, everybody, for the opportunity today to talk about this. Ohio House Bill 606 is expected to become effective on December the 14th. And the law grants temporary immunity to businesses from civil lawsuits for injury, death, or loss related to COVID-19. It's intended to protect businesses from liability in most situations where their actions or their inactions expose someone to COVID. Primarily, that would be customers and employees who may be exposed. And I say that it's temporary immunity because the way that the bill is written, it becomes effective, the immunity, on March 9th, 2020, which was the date of the governor's original state of the emergency order, and it remains in effect until September 30th of next year, 2021, and then it expires. And I think the important thing about House Bill 606 to keep in mind is that businesses can still be liable if they act recklessly or with willful or wanton misconduct. And what does that mean? I think what it means is if your business follows the direction of the State Department of Health and also follows the local health department, which, as Renee indicated, is very helpful if you have questions, then you should have immunity under House Bill 606. And I went into a small business not long ago, and there was a sign on the door that said, no masks are required and we don't wear them. And I'm fairly certain that if an outbreak occurs in this business, that the business would be liable for willful or wanton misconduct by failing to follow the direction of the state and the local health departments. And so the good news about this bill is it was very broadly drafted. It started out that it intended to apply immunity for healthcare organizations, but then it was expanded to businesses, to nonprofit organizations, to religious organizations, schools, colleges. And so it's been very beneficial. I think it will be very beneficial. The other thing I would like to point out, Dustin, about this, though, is we've had some early contact with BWC, and I know we have some BWC folks listening in today. And I think what it's important to understand is House Bill 606 does not prohibit an employee from filing a workers' compensation claim. And that is because workers' compensation claims are not civil actions within the meaning of the bill. So employees are not precluded from filing workers' compensation claims for COVID. But I think it's an important step. It shows that Ohio is taking a look at the issues that affect businesses and trying to make sure that we don't have an explosion of lawsuits against business owners by their customers and their employees. So overall, I think it's a positive step, Dustin.
Thanks, Garrett. Appreciate that. Rob, one question for you from the banking side. What is 1 to 2 key activities that businesses can do in this current economy to keep their banks happy?
Well, communication is certainly the first and foremost. You should be very active with your dialogue with your bank and what's going on with your company. And that certainly makes it easier and gives them a level of comfort. Obviously, it's affected everybody, maybe in a different magnitude, different levels. The other thing that they should look at is cash is king. That was said earlier in the meeting, and that certainly holds true. So whether your cash needs are increased or not, you certainly need to be in contact with your banker during this time. So keep them informed, keep them the numbers they want to see. And if they're not the best numbers, that's okay. It's a pandemic. You didn't bring this on. The point is to get everybody through it. And that communication is just key. I think there's a little bit of a change in the credit history, and I think we're going to touch upon that later. But don't veer away from your banker, and don't be afraid of the change.
Thanks, Rob. Darren, from your perspective on the investment side, what are, I apologize, based on your past experiences and history in the market, is the current market behaving as you expect?
If we put that in perspective, I truly think that it is. Back when I graduated from college back in 1993, the Dow Jones Industrial Average was in the 3,000 range. It closed that year up about 400 and some points. Well, today we see that on a daily basis. A 400 or 600 point movement one direction or the other is not a big deal. But to put that in reality, back then, that for the year was, quite a substantial gain. But when you look at the daily movements, they're about the same. It's a couple percent when we're surprised. Back then, 70 points. Now, 500-600 points, is a big deal. So historically speaking, I think we've got a lot of information, an overload of information, where it was very little back then. So I think, there's more to look at, more to rely on, but the reactions are still the same. Now, I am a bit surprised by how far back we went. With the COVID crisis, I think it was March 12th, if I remember correctly, we went down 2,000 points in a day, but the Dow Jones Industrial Average, where we had hit in February 29,000, actually went down to about 18,000. So I'm a bit surprised by how far it went. But still, again, I'm still going to say that I think that, the reactions are something that's, completely expected. We are maybe a little bit ahead, being at 27,000 today, than what I would have necessarily expected. But I'm still pretty comfortable that, things are being measured as they always have been.
Thanks, Darren. Appreciate that. Kyle, from your perspective, what concerns you the most about your clients as we're moving towards the end of the year? Kyle, you're on mute right now.
Oh, yeah.
There we go. Is that better?
Yes, thank you.
All right. Sorry about that. Well, good morning, everyone. Just a quick thank you to Garrett, Rob, and Darren for joining us this morning. And these guys have got some great information for you. So thank you, guys. What concerns me the most, I think, with the clients is, have we seen the worst of it yet? And the reason I say that is, when we go out and we're talking with clients today, so many of them are doing extremely well. And Andrew touched on some of those things this morning as to why I think businesses are doing so well right now. So, I would say, if I was an economist, I would say my biggest concern is March, April, May next year. And, right now things are hot, but do we have a setback potentially next year due to some of those factors that Andrew said? People are making as much money, if not more, than they're used to making, whether they're on unemployment, whether they're getting bonuses for hazard pay, whether they're getting their companies are paying out additional PPP money. So people are having more money in their pockets. Stimulus checks went out and all that. So I'd say what's concerning me the most, and just to finalize that, is making sure companies are planning for this potential if we do have a downturn.
Thanks, Kyle. Coming back around again, I have at least one more question for each of you. Start with Rob this time. Rob, it seems to be a reoccurring theme that folks believe banks could tighten up credit and lending early next year. What are your thoughts on this, and do you see this happening?
I think that'll be sporadic. I think it depends on the bank and kind of the phase that they're going through. Obviously, there are some companies that may not get through the other side of this. I think most companies will. I think key is you need to snuggle up to your accountant and make sure that you're working closely with them, getting the advice that they give you and following it, really understanding your cash flow and not just your checking account, but whether your inventory level is at or anything like that. But I think you'll see some banks tighten up. We're already seeing that. But I think you're going to see other banks, like we're taking the attitude, this is an opportune time for us to bring in a lot of new business. Once again, we don't look at this as something that anybody wanted or controlled or even brought on themselves. So if they're getting through this stress test, that says a lot about their companies. So I don't think you're going to see all the banks tighten up. I think you're going to see banks that are going to say, hey, this is an opportune time. I think it's a wonderful time to take a look at your interest rates. We're in a wonderful valley, and they say rates are going to be low for a while. You may look at locking those rates in and kind of securing the short-term future or maybe even a little bit longer. But I think if you're in a situation where your bank is tightening up, there's probably somebody else out there that's wanting to knock on your door. So even though I understand that people have great relationships and I deal with that every day, there's always other people looking for new relationships. So don't feel like you're put in a corner. Money's green no matter where you get it.
Thanks, Rob. Darren, when working with individuals and companies, how do you evaluate their risk tolerance and what type of recommendations to make?
Oh, that's a good one. It's done a bit differently between individuals versus companies. On the individual side, it's a very detailed interview process where we're trying to determine how much fluctuation a person is willing to accept in their path of investing. So some might put up with lower lows to reach higher highs on the performance perspective. So we ask a number of different questions that give us detail about that client's feeling about the marketplace, you know, their age. There's a number of different questions. So then we did control that risk on the other side with the vehicles that we use, the asset classes we use, which brings me to the point of the corporations and how that's different. For instance, if it's a pension plan, a retirement plan, that's a fiduciary responsibility where one has to be very, very careful that they include enough asset classes for someone to get properly diversified within their plan. That should include your major asset classes, but could include, you know, additional asset classes like alternatives and so forth. So risk tolerance, you know, is done in a similar perspective on both sides, but again, you've got that fiduciary responsibility, you know, with the companies themselves.
Thank you, Darren. Garrett, with all that has changed over the past several months, what areas concern you the most as it relates to legal or liability risk? Is it employee, product, general, other?
Dustin, I think that's a pretty easy answer, at least in my opinion, and that would be claims by employees. When you look at what COVID has done to everybody, employers, employees, in the last 6 to 8 months, it's incredible. I mean, it's quickly made HR, to me, one of the single most important functions in your business. I mean, we have a number of people now that are working remotely. That's exploded with issues. We have employees who are going through health scares with their family and their loved ones. They're facing childcare issues. They're facing financial strains. There's millions of issues out there that are affecting employees. And what we're seeing is that many companies either lack sufficient HR help, or the HR help that they have is just overloaded. And so I think what I would tell businesses is now's the time to make sure you have adequate HR help. And if you have to reach out to a consultant like Ray or an employment lawyer or something, it's very important, because in the last 6 months, we've seen all the major laws impacted by COVID. I mean, the ADA, the FMLA, we have the Families First Coronavirus Response Act. We have new regulations from the EEOC, the Department of Labor. You have OSHA. Everything has changed. You have the governor's orders. And so what we see is people are not keeping up on these things and they don't understand them. We still have people that believe if you're under 50 employees, you're automatically exempt from the Families First Coronavirus Response Act and the paid leave. So there's lots of people out there that are misinformed, and now's the time to make sure you go back to your HR staff, if you have any, and make sure that they have the help they need, because it's a really difficult time, and we see an explosion of issues with employees and claims by employees.
Thanks, Garrett. Kyle, what is the biggest thing you would recommend to clients to do as it relates to their financial health as they navigate the upcoming months?
I think the biggest thing is having a plan in place. Looking at the business from all angles, sales, expenses, marketing, HR, IT, taking a holistic approach, looking at that business and having a plan in place should things get worse, or it's not if we come across something again like this, it's when. So I think preparation is key. And Garrett made a good point. Having your advisors and talking to your advisors on an ongoing basis. And not only that, I think one of the things that businesses don't do enough of today is bringing all the advisors to the table at the same time. And I think this is a perfect time to get your advisors in a room and have some discussions to protect yourself and your business and your family.
Thanks, Kyle. So I'm actually going to open this up. I have some questions for all of you. We'll just kind of go through the process of if you each want to take an opportunity to answer this. What is the biggest change that you have all seen over the past 6 months as a result of COVID? Garrett, do you want to start with that?
One of the things I think is people dealing with how to work from home and all the issues related to how to work from home. And we really are reinventing business. And some of those things are not all bad. I mean, as we look at space and facilities and how much room we need for future expansions, I think the only positive thing that I see out of this is it's created an opportunity for all of us to do a relook at how we do business. The other thing I think is we've seen a lot of employers who have completely done a review of their handbooks and taken a look at revising their PTO, paid time off policies, and their leave policies. And many of them didn't even know what they said. And so the good news about this is it has required some people to go back and take a look at what they have and reconsider how they do business. So I think, it's always good for us to take a step back and look at what we're doing and why we're doing those things. And I think this has been an opportunity for everybody to kind of critique themselves and figure out where can they improve and look towards the future, because things have certainly changed. And I think even if COVID were successfully eliminated tomorrow, it's still going to affect the way we do business in the future, I think.
Thanks, Garrett. What's your thoughts on that, Darren?
In the past 6 months, I would answer that by saying that I've been kind of surprised by how clients have sort of held through the fluctuations. In each of the past bear markets that we've had, I'll always have a couple people that will lose their faith and sell out of the marketplace and so forth. And I just didn't have that this time around. So at least in my experience, people were a bit tolerant and sort of stayed in there, hung in there. And I was very glad to see that.
Thanks, Darren. What's your thoughts, Rob?
Well, Garrett summed it up very, very well. I will say that this has all taught us that we're going to have to deal with change, and change is something that everybody has to deal with, and how they respond to that is crucial. So I'm going to use the same phrase again: snuggle up to your accountant, your attorney, and your banker, and you'll get through these things. But it doesn't mean we have to stop business, and we haven't. We've found a way to step forward, and people are going to keep taking those steps. So even though we've changed, the sun still comes up, and everybody's still going to do business.
Rob, I'm going to start with you on the next question. What are some or what has been the thing that surprised you the most during these past 6 months?
Wow, there's a lot of things that surprised all of us. And, just the ability to adapt, because we all changed the way that we went to work very quickly, and how we worked. And just changing those relationships to get things done. At first, I think it certainly took us at the bank a while to figure that out and get things done quickly, but now we figured it out. So it is a new day. I don't think we'll ever go back to being the way we were. I think this has changed us. Not everything has changed, but a lot of things have. So even our currency and our transactions and what we see in the bank, there's a lot more plastic transactions now than there used to be. And I don't see that changing. I think that changed people. And I think their ability to use cash on a daily basis has changed. So that was one thing on the banking side that I really noticed right away, is that people that maybe were reluctant or maybe even a little old school that didn't want to use their debit credit card for things, that's changed. I've seen there's an industry that went from about 40% using plastic. Now it's over 85%. And that's a big change with how cash is flowed through our country. But change is still one that's going to be here tomorrow, and the way people accept it.
What are your thoughts on the topic?
I think it kind of plays into some of the stuff we've already been talking about. What probably surprised me the most is there were some amazing manufacturing businesses out there that had the ability to design, implement, and manufacture and switch gears extremely quickly. And that doesn't happen overnight. And I think what that tells me about that business is how well that they understand what they can do in their abilities with the equipment they have, with the people they have, and some of the talent that some of these organizations have. I think that was the number of businesses that basically halted and started making PP&E was phenomenal. And I think that, this is something that can be learned. I think if any of us thought that our governor or governors throughout the United States would completely shut the entire state down, I think that surprised us all. But then not only that, I think that we have to be ready for something like this to happen again. And I think businesses really have to look and take a hardcore look at themselves in the mirror and say, if something like this happens again, what do we do? And have a plan a lot quicker and have a plan to pick up and move and be nimble versus I think some were caught uncertain and didn't know what they had and what to do in this times. And piggyback on that last question, the biggest, what I did see is the number of clients and people, advisors that were even reaching out to one another for advice during this time. This is something that I don't think none of us have ever seen in the business world. And in fact, understanding that not a single one of us had all the answers, and there was no answer on a silver platter, but with some phone calls and working together and some idea creation, a lot of these businesses are gonna make it through, and they're gonna be stronger coming out the back end of this, hiring talent and keeping that business moving. So that's kind of what surprised me the most.
Thanks, Kyle. Darren, from your perspective, what surprised you?
My first inclination is to answer with the word Trump, but I'm not touching that one. So I'll go on and point out that during the Great Depression, there was almost a 2-year period there where the stock market, the equity markets lost almost 90% of their value. Now, our recent drop during the COVID crisis wasn't quite that, but still, again, to go from 29,000 down to 18.5, 40-50% drop, that was very substantial, and I'm surprised it went that deep.
Thanks, Darren. Garrett, from your perspective.
I think I would follow up what Kyle and Rob said, and that would be innovation. We have a lot of manufacturers that when the shutdown orders occurred, their cash flow stopped. And so they had to figure out, how do we sell our product directly to the end user, end consumer? So I have clients who have been manufacturers for 40 years and have never sold retail, and they figured out a way to do it. They figured out a way to sell by a website, by a retail store, or to get the product directly to the consumer. And I think that's going to be a big change in the future. I mean, people getting their cash flow shut off has made them think about, wait a second, our product is dependent on many steps in the chain, and should we be able to sell our product directly to the end user? And I realize that causes lots of issues with your distributors, but I was amazed that I have a client literally that had done business the same way for 40 years, and they shifted gears immediately, and in a matter of weeks figured out a way to sell their product directly to the end user because the actual distributors were shut down. So I think that kind of change is going to continue, and people are not going to forget this.
Thanks, Garrett. Just to piggyback off this question, you guys may have answered it in some aspects already, but are there any other best practices you've seen clients implement over the past several months, or even things that maybe didn't go well that were tried?
The one thing I think is people's cash flow. I talked about that quick change in cash flow. It caused a lot of them to look at their credit applications, whether they have a signed credit application with their customer. It caused them to look at their credit policies, their payment terms. And so I think we had a lot of clients that just never did collections, never worried about the front end screening of customers. And so that was a good thing. I think some of the bad things we've seen is companies trying to take political stances on certain issues, and it just hasn't fared out well, I don't think, for some of them. So some of them have tried to fight, the governor shut down orders and some of those things, and overall, I think those have been largely unproductive. And so that would probably be some of the things we've seen that have been good and bad.
Thanks, Garrett. Darren, from your perspective, anything that you'd like to add?
I would still have to relate that to, clients holding their guns and trusting in their asset allocation structure. When things went down, and again, on the aggressive side, some of them went down quite a bit. Most people, because they were structured properly in their portfolios, didn't experience such a loss. So again, I would have to continue pointing to the clients and their tolerance and holding two things. When we go in as variable investors, we know that 1 out of 3 periods, 1 out of 3 years, for instance, things are going to be down. We know that's a fact. Just sometimes it's more of a challenge than others.
Thanks, Darren. Kyle?
I think just the positivity of it gave businesses the opportunity and time to look at their entire business and plan going forward. And very rarely do businesses really kind of rip apart their entire business and look and assess the entire thing, except for in difficult times like this. So I think it does give businesses the opportunity to do so. That way they can come out of this stronger than they went into it.
Thanks, Kyle. And Rob, what's your opinion on this?
Well, I'm probably going to end up repeating what Garrett mentioned, but it's very true. I think a lot of companies had to change in a lot of areas. And if you'd have walked in 6-9 months ago and said, here's what tomorrow brings, I think people would have really sat down and had to take a deep breath. But here we are at this current stage where people have changed. They've figured out a way to do business and change their business. So one of the good things I've seen out of this is, as owners and operators of companies had to adapt, it changed their business. And I don't think all those changes are necessarily bad. I think a lot of them are good changes. And there's a lot of companies out there doing very well right now and are taking advantage of the situation. So I don't think that the lights are dim. I think we should look that the lights are very bright and keep pushing forward.
Thanks, Rob. I'm going to stay with you, Rob. I know for myself, I've heard from multiple advisors and even clients mention, is there a need after we've experienced what we have to become more dependent on ourselves domestically to produce products versus internationally? And I was just curious what your thoughts are on that, Rob.
Well, in the communities that we live in, I'll say absolutely. we've got a lot of wonderful owners and entrepreneurs out there, and it's not easy to be an entrepreneur. So I think we do. I don't think it hurts to mix in, the other side. But when we can make it locally, there's a sense of pride. There's a sense of we're building good things here. And I think if we can push this unemployment rate down, that it's a good thing. It's funny that the unemployment rate is still over 8%, but I've got a lot of companies out there that want people and need people. So I'm not sure that in the next, hopefully 6 months, as things get back to somewhat normal, that we're going to have the workforce that we need. And I know we touched upon that, but I think that's going to be one of the biggest issues of the next 6 months will be the workforce.
Thanks, Rob. Darren, from your perspective.
I'm not sure that cross-pollinates with my industry and such, so I might pass that on to Kyle.
All right, thanks, Darren.
I think that what's going to happen, in where we're at, kind of similar to what Rob says, is most of our clients are looking for people. And I don't see, I feel that those that are out there that want to actually have a job or a career. So I think that is something that as manufacturers, and as there's continued discussion about onshoring a lot of manufacturing from China and other countries, my concern overall is I think we need to be, as the United States, we need to be dependent on ourselves. And what I mean by that is we need to be able to make everything that we need. However, it doesn't, it's kind of going through that buy or manufacture myself, decision point. We got to have the ability to do it, but doesn't mean we're always going to do it unless we have to. And if I'm owning a manufacturer right now, I'm really looking ahead and going, how is technology going to help my business in the future? Because I really believe that workforce is going to continue to be the number one issue when the economy makes a full recovery. And if we do onshore more manufacturing, who's going to work those jobs? And I really believe as a manufacturer of the future, you're going to have to utilize more technology if you want to grow, because I truthfully don't believe the people are going to be there to hire to do it. So I think if I'm sitting in your shoes and owning a manufacturer, I'm heavily looking at technology and how it's going to impact my future and how I'm going to invest in it for the future.
Thanks, Kyle. Garrett, from your opinion.
I don't think there's any doubt that the trade situation with China has caused a lot of manufacturers to look at their supply chain. Even before COVID, we knew what was going on with China there. So people started looking at their vendors and suppliers. They started looking at their contracts. They were certainly looking at their intellectual property and the things that they were having manufactured in China. And I don't think there's any doubt that even if we have a new president here after the election, I still think there's going to be a look domestically to manufacture more things in the U.S. And rely less on other countries. So I think that if that manufacturing comes back to America, a lot of it, I think it's only going to make the labor shortage that we have, at least in our area here locally, even worse. Because for most of our clients, if you ask them what their number one problem is, like Rob said, it's finding enough employees that can pass drug tests and have the skills they need to work. And so I think that's going to continue to be an issue locally.
Thanks, Garrett. I'm going to stay with you, Garrett. Mergers and acquisitions, we've seen that decrease, from the past couple of months, with COVID-19 going on. Now that we're moving forward and the baby boomer generation looking at transacting again, maybe their businesses, I guess it's a two-part question. What are your thoughts or recommendations on this from a manufacturer side looking to grow? Should they be actively looking for opportunities like this with COVID-19, or should they hold still until they see what's going to happen over the next course of maybe 3 to 6 months?
Well, obviously, everybody needs to look to the future and plan for the future, no matter what it is. And I think in the mergers and acquisitions business, we had a lot of deals that got put on hold when COVID hit because nobody knew how COVID was going to impact the deals that were in process. So we had a lot of people hit the pause button. We had a lot of non-disclosure agreements signed and letters of intent signed, and we had a lot of people that put pause on for several months, and several of those took off and got done this summer. One of the things we are seeing are more earnouts in the mergers and acquisitions business. I mean, people don't know exactly what their revenue is going to be and what the business is going to do. So I think that I've seen more and more discussions in mergers and acquisitions about the use of earnouts and paying for something over time based upon what future business is. And so it's hard to value businesses based on goodwill and earnings looking backwards, depending on what their specific type of business is right now. So I think it's a little uncertain as to how you value the businesses and what the future is going to look like for certain businesses. But I think people are still understanding they have products and services to provide, and they're going to keep doing that one way or another.
Thanks, Garrett. Rob, what's your perspective on it? What are you seeing from the banking side?
Well, there's two sides to this for sure. The one side is if you don't be proactive, then you could get passed up. There are companies that certainly are up 20 and 30, even higher percentages in sales right now. And I think some of that's because maybe the other companies were a little sheltered in their forecasting and what they wanted to do and what they were willing to step out on a limb for. So I think that's a tough one to answer. But you certainly got to look to the future. If you go in a protective mode, then you've set your stage to go down one path, and I don't think one path is good. So I think you need to look at all options, look at your banking, your accounting, and your counsel, and see where you want to go and where you can go. I think you need to have a broad enough vision that says, hey, this thing could be here for many years, and it could go away in the next month. So no one has that answer, but I think you should plan as a broader view, and that things will continue. And right now it looks like most economic factors are increasing. I agree with that. The companies that I'm looking at, most of them are doing very, very well. If for some reason credit tightens up, I believe that there are banks out there saying, hey, we're not tightening up. If you still have cash flow and collateral, we're going to get the money out on the streets. So I would choose to take the positive position and look for growth.
Thanks, Rob. Kyle, what's your opinion there?
I would ditto what the guy said, as well as continuing to look forward and press forward and look at the business at all angles.
Thanks, Kyle. Darren, please answer the question if you'd like to, or if you'd like to adjust it from an investment side of maybe even individuals transacting out of the business. I didn't know if you've seen any changes or thought process of how individuals are taking their funds as they're leaving their ownership and utilizing those funds for investment and retirement.
I don't know that I've had to deal with sales proceeds and such. To answer it personally, I would have given a similar answer as Rob did. But no, I don't know that there would be much of a difference from a manufacturing sale versus another type of business. The ISM manufacturing index is up for the year. Nationally, supposedly things are getting better, but I don't know how that applies here locally to the attendees on this call.
Thanks, Darren. I have one final question. I think we've ran through all of our questions that we've received. I really want to just open this up to each one of you and just give you guys a couple minutes on any final thoughts or comments that you would like to mention to our team and our attendees that are on here. So Darren, do you want to start? What final comments or thoughts do you have?
I'm sorry, you broke up there, Dustin. I couldn't hear you.
I'm sorry, Darren. I just wanted to open it up to each one of you guys and just to let you have a couple minutes to offer your final thoughts or comments from today.
Final thoughts. Final thoughts. Well, I guess I know that on this call there's the likelihood that there's several business owners, and the one out of all that we talked about, the one thing that sort of concerns me most is fiduciarily how much they're sort of preyed upon, if you will, in the retirement plan environment. So, I highly caution folks, to make sure they're doing what's appropriate there. You can even have, your retirement plan, for instance, evaluated. Paul with retirement plans inside of Ray, for instance, those on a daily basis to give his opinion of what he thinks is being offered and the quality inside and such. So again, out of the things that we've talked about today, that's what I would lean back to is being cautious on the fiduciary side, with your businesses.
Thanks, Darren. Rob, do you have any final thoughts?
Well, we're in a unique time, obviously, and November is going to be interesting. So regardless of which way November goes, I think that we, as business owners and entrepreneurs, that we need to be optimistic that business is going to continue to trend in a favorable manner, which I think it will. I think the pandemic is not going away, but I think we understand that there's a way that we can at least be safe. And I think if we do that, the new normal is here. And I think the change that some of this brought on us was good. I know that I've got several business owners out there that were able to take a couple steps back, evaluate their business, slightly change their path, and it's turned out to be a good day for them. So I just encourage all the owners and operators out there to say, hey, tomorrow's a good day. Let's keep marching forward.
Thanks, Rob. Garrett.
I would echo what Rob said there are a lot of business owners out there, and I think, your employees look to you as the leaders of your company, and you need to be positive, look forward, not backwards, stick to your vision, your mission, your purpose that you had before COVID. Those haven't changed. And look at your cash position. The one thing that surprised me a bit was we had a lot of big successful clients that the minute their cash flow got shut off, they didn't have a great cash position. So I think that's something to keep in mind. And the last comment I would share is we need to probably show a little extra compassion for all of our employees in this time, because they face some different issues than what we do. And as we all said, good employees are hard to come by. So we may need to be a little more flexible now than we have been in the past. And things will change and the sun will shine again.
Thanks, Garrett. Kyle.
I would say a couple things. Assess your business strategically. Look at where you're strong, where you're weak. Use this as an opportunity for expansion, and not only looking at other businesses to potentially purchase, but also going out and finding key talent right now. Believe it or not, a lot of businesses have had to cut wages and different things and freeze pay increases and that. So this is an opportunity to go out and get some of the talent you may need for your business. So assess that. One of the other things I think it is to realize is that in the future success of a business, you have to be looking at everything. And I don't think dumb luck's going to get us by anymore. And the fact of buying a business and just running a business and profitably anymore without taking into consideration, all the different aspects of that business, the revenue, the expense, the IT, the marketing and sales. If you don't have people helping you with those things, it's going to be very hard to be successful in the future. So just spending some time working on the business and not in the business. And then I would ditto, other guys' comments are extremely good as well too. So.
Thanks, Kyle. That's all the questions we have right now. If any of you have anything additional, please let me know here. We have a couple minutes left. If not, we'll go into closing remarks. All right. Garrett, Kyle, Darren, and Rob, thank you so much for sitting on our panelists. It's not always easy to follow up each other, and as we're talking through different things. And appreciate the time that you guys are willing to give us and help us. And we really appreciate the partnership we have with you guys. Some closing remarks. I just want to thank everyone, all of our presenters today, our attendees for sitting on this. Thank you. It's our first virtual National Manufacturing Day training. As we go forward, things are changing for Ray too. I would expect to see more webinars, And through that, I know I'm not trying to steal Amani's thunder here as she's going to jump back on, but please take the time. Let us know from our survey, if you got any questions or things that we could do better. Also, let us know what else you'd like to hear, because I know we're trying to continue on the manufacturing side, which is the lifeblood of Ohio. With the amount of manufacturers we have, we want to keep pushing information out to help everyone. Just like Garrett and the team said here, we're all in this together. We're trying to help. We're trying to work through this. So please reach out if you have any questions. I know one of the final slides will have everyone's contact information that is presented today. If you're unable to get that, Amani will have some different items that, how we can get that information. And I just want to thank everyone again. I really appreciate this time, and I look forward to what we can do together as a team. On that note, Amani, I'm going to let you take back over.
Awesome. Thank you so much. And you guys did great today. And thank you for joining us for today's Manufacturing Education Day 2020. We hope the team was able to provide you with some valuable insight that will help you make sense of the current government recommendations. If you sign off today and realize that you have additional questions, you're always welcome to reach out to the team by clicking on the People section of the firm's website at www.razecpa.com. That's REA. Don't forget to watch us for an evaluation survey, access to the recording of today's webinar, and more. And thank you again to our sponsors, and we hope you have a wonderful rest of your day.